Hello everyone, and welcome to this Edison TV interview between myself, Elliot Burstock at Edison Group, and Roger Clarke, who was recently promoted to CEO of IPSX earlier this year. Roger, congratulations on that, and welcome to the Edison platform.
Well, thanks, Elliot, and hello everyone.
Yeah, and Roger, maybe for those of our listeners, viewers who are not that familiar with yourself or indeed IPSX, are you okay to give a sort of brief background maybe of your career and then touch upon what the International Property Securities Exchange is and why it was set up?
Yeah, thanks. So I'm Roger Clarke, and I've been involved in real estate markets and capital markets for nearly 30 years now. I was an investment banker for a couple of decades with Cazenove and Clarke Benson and Rothschilds. And then about 7 years ago, I moved out of banking into real estate, where I worked at a private equity firm called M7 Real Estate, and have been involved in a number of transactions, largely focusing on indirect corporate transactions around real estate. One of those investments was into IPSX, and I moved over to IPSX from M7 about 3 years ago, which coincided actually with the point at which IPSX was granted its recognition, its license to operate by the FCA. IPSX is the first and only regulated stock exchange in the world that's dedicated purely to trading securitized real estate. And that's really important because that's now opening up what is actually the biggest asset class of all, real estate, to a much broader range of investors by making it securitized, making it digestible into much smaller ticket size pieces. You can buy as little as £1,000 worth of shares in a building. You get all of the protections that come with a regulated stock market. You get all of the transparency and liquidity that comes with a regulated stock market. But it's real estate that you're able to buy.
Okay, great. I'm right in thinking that the majority of these assets are single asset REITs, and maybe you touched on the trading sizes and so on. Maybe you could touch upon some of the other advantages.
Yeah, the concept behind IPSX was originally to have what we call single asset REITs, or single asset real estate companies. They don't actually have to be REITs, they all are so far, but they don't have to be. And that concept has actually extended a little bit over time to take in what we call multiple asset issuers portfolios, as long as the portfolios are very concentrated, very homogeneous sorts of assets. So let's explain why that's important. And as you say, let's talk about single assets. It all applies to concentrated portfolios as well. I think it flows, Elliot, from the fact that there are some really important trends taking place in investment markets at the moment that your viewers will be all too well aware of. I think the first trend that we've seen in the last couple of years is a huge shift towards people wanting to manage their own portfolios, invest into assets themselves. And this comes partly from the want to have control over what they buy. In a world of ever greater focus on ESG issues, it's really important to be able to pick your own investments. That allows you to make choices. It also allows you to control what's in your portfolio at any given time. And it also allows you to cut out a large swathe of fees that are involved in the wealth management industry, which people are keen to address. There's also been, more specifically in real estate, a couple of really important trends emerging recently. Knight Frank have just published some research showing how, obviously, in ever more volatile and challenging markets, people, particularly private client investors, increasingly want to get access to real estate because it obviously has some very powerful wealth protection characteristics, and yet continues to produce income, the like of which it's hard to find in fixed income markets. And the second trend we've seen, some research that has just been published by Savanta, is that particularly now I'm talking about in the UK here, people really do like the idea of being able to invest in real estate assets they choose, especially if those assets are local to them and have some sort of connection. Clearly, single assets provide that ability to choose at the most granular level what you're investing in. We are providing that at IPSX, but in a more sort of theoretical sense. The important thing about single assets is that because they clearly have a very focused, decisive, clear strategy, it's a single asset. And because often the asset manager can articulate to the investor a clear strategy to grow the income, to increase the rental income that's coming from the asset, that means you can begin to invest based upon your expectations of future performance rather than just looking at a historic NAV figure that's given by a valuer, always trailing behind the time by definition. And that's what allows asset values to get ahead of NAV. It's what allows things not to trade at a discount. We see this in the existing REIT market. We're going to apply that to every type of real estate through the single asset. And lastly, and most importantly, the thing that a single asset trading on a dedicated exchange just for real estate, the thing that will provide is an escape from the noise or the beta that comes from being part of the broader stock market. The large diversified REITs display a really disturbing correlation to the FTSE 250. They're just trading in line with the market. Markets do that on the whole, but ours doesn't because it's a dedicated, separate exchange just for real estate assets. That's the most important thing that comes from single asset REITs on our exchange.
Thanks, Roger. And these are real estate assets across all sectors. Are you okay to touch upon some of the examples that you have listed on the exchange?
Yeah, so we launched, Elliot, we launched the first IPO in May last year. We're coming up for the first anniversary of that. That was a company called the Mailbox REIT, a large mixed use asset, predominantly offices, but some retail, some food and beverage, leisure use in Birmingham, a very well-known asset. It used to be the Royal Mail's sorting office in Birmingham, very large asset. It's actually the largest mixed-use site in the UK outside of London, nearly 5 acres. It yields 7% and it's performed incredibly well over the last year, ahead of all of our expectations. The second issuer, which came to our exchange, admitted to trading in December just before Christmas. That was actually a portfolio of 17 retail warehouses, valued at £110 million and yielding 8%. And it actually published its first set of quarterly results just last week, and the NAV has risen by 9% already in 1 quarter. It's performing terrifically well. 9% rise in NAV and producing a quarterly dividend at an 8% annualized rate. So those are two quite different types of asset, and those are the two that we have in the exchange so far. We have a number of issuers who are currently in the sort of execution mode with a view to coming to market in June and July ahead of the summer break, and they are across a number of different sectors. We have a single office building in Liverpool. We have a single office building in Leeds. They're both coming in June. We also have a residential portfolio that's being assembled in Canterbury. It's a very interesting transaction because it's actually a mixed tenure of residential types. There's some university accommodation, there's some school boarding house accommodation, some private rented, and some social housing, and indeed a hotel as well, all put together. You might say, well, what's that? Why is that on IPSX? There's no commonality there. But the interesting play there is very much all based in Canterbury city centre. It's an interesting strategy that you see often in private equity, but we don't have anything like it on the public markets. And that's a big part of what we're trying to do at IPSX, is to give private investors the ability to do things that big private equity and sovereign wealth funds are doing all the time.
Great. And you mentioned these private investors. I imagine the assets on the exchange, they're open to everyone. Is that right? How does it sort of work, and which platforms can investors look to trade these assets on?
Yeah, so we actually run two markets, something called IPSX Prime, which is a regulated market open to all investors, retail investors, as well as professionals. That is governed by the FCA, of course, and sees a prospectus being published, having been pre-vetted by the FCA, 25% minimum free float, designed for standing assets, stabilized assets, producing yield. We have a second market, IPSX Wholesale, which is what's known as a multilateral trading facility, a little bit like AIM. This sees an admission document being published. It can have a smaller free float. It can have development assets. It is only open to professional investors, that's institutions and eligible counterparties and professionals. The assets which will come onto our prime market, the first of which is one of these single office buildings coming in Liverpool, they will be made available by the normal intermediaries that you would expect. So Interactive Investor, AJ Bell, Jarvis are going to be acting as intermediaries on that first prime IPO. So once we see deals on prime open to retail investors, we will see all of the usual intermediaries taking part in the market.
Okay, great. And you've touched on the pipeline there and some exciting new assets coming onto the exchange in the summer. A bit further out, what's the sort of pipeline looking like? And then maybe if you could touch upon how investors can get more information on the assets on the exchange, that would be great.
Yeah, we certainly have a pipeline in which momentum is now growing. As each time we do a new transaction, I think a lot of people who understandably perhaps cautious or reticent about adopting a new market get less so. We've got conversations going on with in excess of 40 potential issuers on the exchange. As with any pipeline, they won't all necessarily come to fruition, but I certainly expect to see us having somewhere between 10 and 12 issues trading by the end of this year. And that will include some development assets in London, some really interesting ESG strategies, some co-working, serviced office assets, things which are very topical and sought after by investors at the moment. And it's a great question. How can your viewers keep abreast of things which are coming down the tracks here at IPSX? Well, an obvious place to look is IPSX.com. We have a section on our website which shows all the securities trading now. We have a section on our website which will be disclosing anticipated emissions as they're coming. We have a service available if people want to make sure they don't miss out on hearing about these things first, where you can subscribe on IPSX.com to get alerts and make sure you hear about these things as soon as everybody else does.
Brilliant. Well, that concludes our interview. Roger, thanks very much for your time. Sounds like an exciting time at IPSX. We wish you all the best, and yeah, we'd love to get you in for another interview to discuss more progress in due course.
Great. Thanks very much, Elliot, and good afternoon, everyone.